Hello traders, Gary Wagner here. Just about 10:15 in Honolulu, 4:15 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. First day of July 2016, and this is the Daily Report for Gold and Silver, our weekend review. And what a week we have seen in the market. Precious metals finishing on a strong upside surge and rally. Equities, after selling off, coming back towards the end of the week. Interesting action in the U.S. dollar as well as crude. We'll try to discuss all of these topics all on today's weekend review. Of course, we did recommend entering a long position in gold. Traders taking that call, of course, got in at 1338. That is basis the COMEX contract, August contract. Market is currently trading at 1344.20. Putting it up about $23 on the day. High 1347, and the low on the day is 1323. We'll talk about the trade as well as our stop placement and upside target or exit strategy all on today's report. Let's take a look at our first gold chart. So traders, an incredibly strong finish to the week in gold. Gold closing up, as I said, looks like it will settle up about $23, currently trading $13.43 and change. We took a stab, a long position at the market at $13.38 this morning. I was absolutely contemplating sending out that special trade alert last night, but I felt that especially with our mainland viewers, they would pretty much be asleep, and more so, I wanted to see if this dramatic upside surge that we were witnessing would hold through at least the first part of the trading session as it moved to New York. In fact, it did, and when I saw that the market was genuinely holding, that is the point at which we actually issued our trade recommendation. Now, we are recommending stops below 1307, and so to give you an idea of why we put the stops there, 1307 puts us just below the lows of these candles right in here. We're looking at a half a day standard candlestick chart, two candles per day, and the way that I'm looking at this market at this point is that we had our wave one, which took us to our first sets of highs, which was around 1290. From there, we had a correction. That correction included an irregular correction because the B was actually higher than the conclusion or the high in our wave one. From there, we went to our final C, which I believe was something like an ABC. That concluded our wave two, and now we are in a long impulse wave three. Wave three cannot be the shortest of any of the waves, and that's going to be part of the rationale behind my upside target, but I believe that we have completed in terms of that wave three, subcount one, subcount two, and we are now in this subcount three of wave three as we come off of these lows that came in roughly at 1045, 1050, that concluded that extremely long correction that we have been so ingrained in over the last couple of years. And so traders, to put the most recent move into perspective, I bring up this weekly chart, and this weekly chart really speaks about the long-standing correction from this top at 1900 plus all the way down to this bottom, which occurred at the end of last year, beginning of this year, when the market traded to a low of approximately 1050. The way that I have put a count in it is we had a 5 count down, waves 1, wave 2, wave 3, compression triangle, which was wave 4, this long wave 5, and that, of course, concluded our 5th wave. Here we had 1, 2, 3, 4, 5, 5 of 5, and that concludes our A, which takes us into a long-standing B. Now, straight Elliott wave modeling and forecasting tools that we use really looks for a B wave to be anywhere between 50 and 75% the move that we saw in A. Now realize A began in really 2011 all the way to 2015, the end of 2015. So we're looking at a 5-year, multi-year correction. And so the move that I'm talking about in B is a multi-year move. We're only in the first part or the first minor count within that of our major count. But that upside target, as I said, at minimum will be a 50% move. And that 50% move could be as high as 75%. In other words, B waves will typically go between 50 and 75% that of the A wave. That A wave is a dramatic wave down. And therefore, this long-term target, as you can see on the low side, is about 1,400. The high side actually goes up to 1,685. Again, a multi-year move. I'm not looking for this overnight. The reason that I have been really focusing on this 50% is because we first came out with these forecasts when the market was trading at around 1,100. And at 1,100, for me to come out and say that we could see the market go as high as 1,685, I think I would have lost some credibility, although that's what the model states. Also, I wanted to have more concrete proof that we absolutely had ended this dramatic downside correction and have moved back into rally mode. And with all of that in mind, upside target for this particular trade is a little bit different. Now, first of all, let me go ahead and move this over. What we are looking at is as follows. 1346 is a 61% extension of the wave one. This is how we're counting wave one from here to here. We begin our extension here, and then we calculate different areas the market could go to. So we do have a little bit of resistance at this 46, high today 47. I don't see a real problem moving through this particular resistance area. But my upside target is at best, or I should say at minimum, really a one-to-one relationship. In other words, wave one and wave three are equal. And based upon that move, I believe we could see gold move to approximately 1,400 plus per ounce. Traders, one of the bigger surprises this week is the dynamic move we have seen silver accomplish. Today, trading up over 5%, just shy of $20 an ounce. That's right, $20 an ounce at 1968. Up about $1 on the day. The low today, 1869, and the high on the day is 1989. We certainly want to take a look at a couple of silver charts and try to ascertain exactly what's going on in that precious metal market. Traders, there is something going on in the silver pits. We're looking at a weekly chart. You can absolutely see very easily market opened, or had a low, I should say, this week of about 1750. It is now trading at 1970, a $2 plus gain, $1 of that coming today. We obviously broke clearly over a support level that I believed would be a critical level, which is at 1850. Absolutely no doubt about that. In terms of where this market could go, we really need to actually go ahead and compress this chart. And it's been impressive to say the least. One thing that we want to take a look at these series of bottoms right in here. We carry this line over, that's at 19. And absolutely, this was former support, which would make it headwinds or resistance. Now, no trouble just barreling through that particular market. Even more so on a technical basis, we then look for tops for our next area that we can expect to see some major resistance. And lo and behold, it doesn't really come in till about $21.50. We're going to want to take a serious look at silver and see what's happening in this market. More so, is there more room to the upside? That's something we will focus upon next week. U.S. equities tracking higher today, although a very modest gain, modest compared to the dramatic price increases we have seen really beginning on Tuesday, I believe, of this week. We have seen the largest weekly move this year in U.S. equities, just shy of 18,000, 17,949. That is our close on the Dow Jones Industrial Average. S&P 500, we're looking at the E-mini, 2096.75, putting it up 6.5 points. or about 1/3% gain on the day. Traders, we are looking at a weekly chart of the Standard & Poor's E-mini, Standard & Poor's 500. Look at this single candle. This single candle opened at roughly 2011, closed roughly at 2096. It is the single greatest gain this year when we look at the Standard & Poor's 500. This is the starting point, of course, of this year. And if you just look at candle size, you can see not only the fact that it was the single largest move, but how large of a move it was. And traders, considering the kind of roller coaster we have seen U.S. equities really go through, starting last week, Brexit vote comes in on Thursday. Of course, Friday, dramatic 600-point drop in the Dow Jones Industrial, tremendous drop in Standard & Poor's, taking it down below the 50-day moving average, and on a low, taking it below the 200-day moving average, but closing above the 200-day moving average. Following day, market continues to drop. It actually drops to 1980, and from that point, it was all over in terms of the market having a key reversal. Look at these dramatic moves for the starting on Tuesday and Wednesday, dynamic upside moves. But over the last couple of days, you can see candle size has definitely gotten smaller. The gains have gotten less, and we are quickly approaching this resistance area up at the top of the market, the recent highs. Again, this is something we'll definitely want to take a look at next week to see whether or not we run into a wall of resistance here, or if we finally get that breakthrough and see U.S. equities go to a new record high. Traders, absolutely no doubt, an exceptional week, an exciting week in the markets that we follow. An extreme turnaround in U.S. equities, moving back to their recent highs. Precious metals, well, specifically gold, which had been consolidating through the first part of the week, absolutely breaks out and trades dynamically to the upside, up about $23 today. And silver, as gold was consolidating, silver was pushing higher on a daily basis. And as I said, I'm not convinced I understand the rationale behind the play that is being made in silver, but nonetheless, it is a dynamic play to say the least. Traders, maintain your current long position in gold, maintain your current stop. This has been Gary Wagner wishing you, as always, good trading. Have a great 4th of July weekend, Independence Day for those on the mainland, and all of you have a great and safe weekend. We'll talk to you next week for another daily update and review. Bye-bye.